Hi everybody, welcome to Deep Practice for August 16th, 2016. Last week it's going to sound kind of confusing or complicated. We were having a makeup session on we had a makeup session on Tuesday, and then we were going to have a regular session on Thursday. We did the makeup session on Tuesday, but the weather was so bad here on Thursday. It was just pounding thunderstorms. And we lost internet, we lost cable. Fortunately, we didn't lose electricity, but we did lose the internet. It was going in and out all late afternoon into the evening. And the storms just continued. They weren't going to stop until I think it was around 10 o'clock that night or so. So we decided to call it, and actually went out to a different town where they had internet to be able to send out the email to everyone in a Starbucks. So sorry about that, but it was weather related. So tonight is a makeup for last Thursday's regular session. Hope that's clear to everybody. And we will, of course, be doing a session, again, the normal session on Thursday this week. And we'll detail that in a moment. So tonight's agenda is we're going to work on something different than what we've ever done before. We're going to look at multiple time frames. We're going to look at swing and position trading using the yearly, quarterly, monthly, weekly, and then as we get into it, we'll look more closely at the weekly and daily charts. We'll start off with the yearly, quarterly, monthly, and weekly, focusing mostly on the weekly and monthly and quarterly, with the yearly in the background. And then as we get into an interesting situation, we'll switch over to weekly and daily charts. And then we'll take a look at the current market. So I think this will be interesting for you. I don't know. I've never worked through such high time frames before with us, mainly because we didn't have the capability of doing that. It's not quite true. I certainly have yearly and quarterly charts that I can construct off of TradeStation because I've got some proprietary software that allows me to do that. But I can't do a walk forward deep practice session with all of those time frames, or couldn't until the most recent software that we got, multi-charts. It still is a little iffy. It doesn't quite, sometimes it's off a week or a couple of days, so that you'll see probably that the last price sometimes can be off on some of the charts, but in general it's pretty good, and it's certainly good enough for our purposes. Then we'll take a look at the current market before we close here. So just as a reminder, we will be meeting again on Thursday this week, August 18th, and that way we will be sure to get all 4 sessions in. I was out, I think, the week of the 4th, right? And so we had a session on the 9th, which was the makeup for the 4th, but then we weren't able to do the 11th. So now we're doing the 16th, we'll do the 18th, and we'll do the 25th. So it'll be, we have done the 9th, tonight is the 16th, next Thursday is the 18th, and then there's the 25th. So we'll get 4 sessions in this month. Hope that makes sense to everybody. All right, so let's just go to the charts and the slideshow. Good. Okay, so let's start off just looking at the yearly here. I'll open this up a little bit. And the quarterly. And this is really no different than looking at a 5-minute and an hourly chart, or a daily and a weekly chart, a weekly and a daily chart. So what do you see here? This is the, let me orient us here. This is the yearly. So every bar on this chart is 1 year. And so we have 1, 2, 3, 4, we've got, you know, probably 15, 20 years of data up here, okay? And then this is the quarterly chart. So every bar is composed of 3 months, and there are 4 bars to the year. You can sort of see the, well, I wouldn't go by these. I'm not sure that these are accurate, that these are yearly marks. I don't think these are yearly marks here. So don't go by these. But what do we see on the yearly, and what do we see on the quarterly? And what does that suggest here? Just looking at these larger time frames, quarterly and yearly. What do you all see? Maybe getting climactic on the yearly and even in the quarterly, okay? There's poor close off the high on both bars, supply is coming in, right? That's Dean. Richard says getting very steep trend here. The quarterly looks climactic with a big push up, increased volume, and now closing off the highs, okay? Edmund says climactic on both time frames, both closing off the high, suggesting sellers at the top expecting pullback. Okay, so I cannot disagree with you on the weekly, on the yearly. This is quite a steep path up, right? We have a breakout. Notice here that we come out of this congestion area, right? So we would think about this in terms of, look at the annual accumulation that's taking place in here, right? We have, let's just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 or 18 years of sideways movement here. And we always know that it's sideways movement because we can draw a line through and hit pretty much every single price bar in the congestion area. It's a simple way to do it, but it's very effective, right? We can't draw a line through any of these. Obviously, this is in a trend, okay, making higher highs and higher lows. So we have this situation here where we have a congestion area and the market moves up. Now let me just, Brian's added some comments here. Let's see what he says. Long-term trading range with no real signs of weakness on the yearly. Range, right, that's in here, right? Range of, with no real signs of weakness on the yearly. Range includes a spring and lots of strong closes. The absorption ends with a jump across the creek and a very strong move up higher with ease of movement up and firm closes. Final yearly bar is currently off the high, so anticipate some sideways or a pullback. The quarterly is also very strong, but the last bar is closing off the high. So again, anticipate a pullback, but the market is still very strong. Why would you say the market's still very strong? And the answer really is in the quarterly. I'll give everybody a chance to comment on that. I can't disagree with you that we're getting parabolic on the yearly, but there's something about, particularly about the quarterly, that would suggest that we are probably not at the end of the move up. In other words, it's not really climactic. What might that be, do you think? What might that be? Quarterly just went sideways, then accelerated higher again. Strength in the absorption area, then breakout above. Yeah, yeah. That's strength. And then Dean says there's an absorption area, then breakout. Small consolidation before the push up. Right. It's not likely, because we have this in here, we have a sideways line going on, and we can draw our line right through, and we're hitting all those price bars, right? So we have a sideways line, and the market just broke out strongly, too, with all that volume. So the odds are that we're not going to just come rocketing right back down and through here, okay, because we've just broken out. Typically, what we would look for, one of the principles of market behavior, is that the first pullback on a breakout is often a good trade. So as we pull back in here, we might be on the quarterly, we might be looking for a trade off of that time frame. And of course, we would do that off of the monthly or weekly charts, right? So that's good. And then because the pullback 2 bars ago on quarterly chart is very shallow, then the bar gets reversed right away. Yeah, I think what I'm trying to say, though, that's true, but the key thing is that we just broke out of a consolidation. And a breakout of a consolidation typically suggests that there's still more upside, at least a retest of the highs and maybe a little bit more. We can look more carefully at the quarterly. We can, let me see here. Yeah, we can, this is the trend tool, I think. We can stick a trend line on here. And when we do, let's see if that will do this or not. I'm not sure if it will. Oh yes, how nice is this? You can clone this. And so you can see that we're getting into the overbought category up in here, right? And so, not surprisingly, we would get a pullback at this point, okay? So, looking at this, we're getting close to maybe some larger pullback because of the yearly chart, but the quarterly is suggesting to us that we are maybe not quite done with the upside momentum here, okay? Let me scrunch this down just a little bit so we can keep this in mind. And we can do the same here. Bringing this down a bit. Down in like so, okay. So, now, here's the monthly at this point. What's the monthly telling us on this chart? And as you're thinking about that, I can draw in some trend lines here, which are going to look very similar to that quarterly because we're basically using the same chart, just with smaller data. So what's the monthly suggesting, and where might we wind up going to on the monthly chart? Strong break above the range, but now a reversal at the overbought position. So some downside expected. Yeah, and that's consistent with what we are seeing on the quarterly as well, right? Strong move up, but some downside. So likely to pull back maybe to 2,000, says Richard. And that would be right along this line here, right? And that would make some sense. Now let's see, I know that, yeah. Oh, one of these days I'll get this correct. But we can, there we go. A retest of the volume acceleration bar. Okay, somewhere in here then, somewhere in the middle of that, in here, maybe. That's a possibility. Let's see, I can do this. Funny thing about this software is you can't use the grab tool to do that. Okay, so we'll retest the vertical acceleration bar into the 2000 area. So somewhere in here we're looking at, right? Somewhere in this area in here we're looking to come down into. It would be really great if pullback brings it to 2000. Yeah, oh, absolutely. Because we come back into the 2000 range in here, we've got old resistance, which should now be support. We've got, look at the acceleration up. But we can certainly see, because of the way this month closes, this might not be the last day of the close, it might be one more day in here, but we're at near the end of this. And we've got some volume picking up here, and we're obviously getting some selling coming in. We would expect further downside, right? We would expect some further downside. Does that make sense to everybody? The chart shows a high of 2400. It doesn't look right. We have not crossed 2200 yet. Yeah, we have 2200 here. 2200 is the close. I mean, that's the way I read this. 2200 is the close. 2230 is the close. This is 2000. This is 2400. So we came right up to the top of 2400. And that's consistent with all the charts. I think I'm correct here. You're looking at trade station data. Well, this is trade station data, but you should be try to focus on what, well, you do, yeah, you can do what you like, I guess. Okay, so let's see. So here we are now on the weekly in here, okay? And let's walk this forward here. All right. But before we do, let's get our chart situated with some trend lines here. So obvious trend lines, we would put one in here, maybe something like this. Yeah, we're not going to get down below that. Now let's see how that looks up in here. Yeah, we're right about that point there, give or take. What else? So what other lines might you draw in here? That kind of represents our overbought situation, right? What else might we draw in here? 1950, the range highs, okay, across here. That would bring us down roughly to our 2000 level, right? So that would suggest, if that were to happen, we'd have to be breaking the weekly trend channel here, which is not a great trend channel, so that possibly could happen. Where else might we see support come in? $21.50, right in here, somewhere in here maybe. There seems to be a trend line in the middle of the trend channel. You mean through here? Like this? Not a, no. Okay. In the middle of the trend channel. Let's see. if I can understand what you're saying. Like this. Yeah. Okay. Yeah, possibly. Possibly. All right. High volume widespread bar that closed poorly, the high of this. Up in here. Right along like that. Yeah, okay. All right, so there's a variety of different lines in here. Let's see what we've got as we move forward with this. It's funny that that does that, isn't it? There we go. This has some peculiarities to it. So now, if that's true, if this line is important, or this line is important, really what we're talking about is the high of this bar, right? So coming into this area in here, if this market holds up higher, that could be fairly significant. Or it goes down into this area here, breaking this trend, this demand line, and coming down to this level in here, okay? Because this and this are related, okay? And obviously, this goes over to this level here. And I don't know if that's the top of last year's high or not, but that could be significant as well. All right, that should be pretty clear. So let's start moving forward here and see how this... Okay, so there's the end of the month on that last bar, and the week was in the middle, and also the end of the quarter, but not the end of the year, all right? Market still seems pretty strong in here, doesn't it? With this weekly bar. Nothing we can do about that. No trade to be made there. Just noting that when it hit this level here, as it did here, we see some buying come in. So then the question is, as it comes back down, are we going to see more buying come in around this level here? Or not? Maybe we don't. Bit of a shakeout on the weekly. Yeah, possibly. So let's see what happens with this. Potentially more buying coming in there, popping off of that. And then closing off of the lows. So this may be a significant level here as we watch this unfold. Now we approach it again, right? So the question is it going to break this little area here, maybe go underneath of it a little bit and spring off of it? We don't know, but look at the monthly. The monthly's not looking good, and the quarterly is also starting to pull back in here. So we want to be a little bit careful with this. And it does go underneath. I'll just extend this. No, can't do that. So we come down to the demand line in here, and now we're coming into that lower level, which I think was probably more up in here. Now, if we were watching this on the daily, what would this represent for us? A long trade. Yeah, a spring trade would occur in here, right? So we could take a long in here. As a potential trade, if we're if we're playing this market like this, and so we start to get some movement up, And again, buying coming into the same area. This is a key area in here. Now let's do it this way. Let's get rid of this and get rid of this. And look at it in this regard right here. A key area here, because what we see is supply had come in, takes a little bit to push through, and it's holding in here to push up and through, comes into this area, pops off of it, comes in, starts to pop off, comes down again, looks like it's going to be really negative, now goes underneath, flushes perhaps, and then rallies up in here. So this would be, in fact, a good spot to take a trade. Everybody see that okay? Even though the monthly does not look that strong. Yeah, so you've got to be careful with this, right? You're putting on a trade here, but if that monthly wants to come down, and we see 2 months in a row here where we have closes off the highs, so there's some negativity, and the quarterly can still go down lower, right? So taking this off, we want to see this market push up and through this resistance and perhaps get a new trend channel going, a new angle of ascent going in here, a new stride, right? A steeper stride up, which would be in keeping with the idea of climactic action on the yearly, that we would really push up on the smaller time frames, creating that climactic situation, and with the yearly being in a potentially climactic, have a climactic look to its trend, that parabolic look, everything would line up for a selling climax up in here, okay? However, if it doesn't, then we could potentially see this market come back down here because we've got negativity on the monthly. And so our line in the sand, of course, is going to be right in here, right? We don't want to see this market come underneath this, because if it does, then it's got a right to come back down to, and let me just do this properly. It has a right to come back down to the trend channel, which is more or less in here. And maybe even a little bit lower, coming down into this area for a quarterly pullback, okay? So yeah, you can take that trade, but you've got to watch it carefully. You have to monitor it and make sure that it is doing what you anticipate it's doing. And what we want to see it do is pretty quickly take out the high here of 2,400, give or take, okay? So let's see what happens with this. We got good volume on this day, so that's a plus, right? And now we're starting to head up. We're right at the resistance of the prior few weeks. So we want to see it push up above that nicely. And we see that there's some resistance at the end of that week in here, okay? Perhaps more difficulty coming through here. So we're 3 or 4 days into the week, and what's your impression now of this trade? Cut it. There's no demand, says Brian, and Dean says it's tired in here. Yeah, it might be a good idea you could do it one of a couple of ways. You can bring your stop to break even in case the market does take off to the upside. You can put a stop underneath the low in here. Well, I wouldn't do that, but put a stop underneath the low in here, tighten it up. Your stop should be under here. but you might bring it up under here and tighten it up and take a small loss if that happens, or just get out of it altogether. And now we're at a point where if the stop is under here, this is negative. It can't get up above this resistance, right? And in fact, we're getting on the daily a bit of an upthrust in here. And if we draw a line through, we can see that the market is in congestion. It's obvious here on the monthly. And so we see the likelihood that this could either continue in congestion or come down for a bigger pullback. Brian says, let's short it. No demand in an area of supply after being overbought. Okay, we can short this in here. And let's see what happens with this. We're coming down to that level again. And what do we see here? Let's look at that again. Because it's instructive. Okay, so this is the next week. We're short. We come down. We come down. We come down. And then what happens? We pop up. Yep, you can see it, right? You can see it happening here. Pops right back up again. So what does that suggest to us? Line of accumulation and demand in here. Yeah, we've got a pretty defined line in here, right? Whoops. So should we still be short? There's still some demand in the market, yeah. Brian says we got to reverse here. We got to get out of the short and go with the long. This is a test of that spring with no supply at the support level. Right. Notice the volume down here at this point. In fact, if we back it off, look at the volume down there, right? And that day brings out all that volume, you see? So you have to cover the short, and the correct play here is to go long again. And now let's see if this market will go. What's the monthly telling us on this chart, by the way? It's cluster of closes, price are holding, but it's not going down, right? We have what appears to be weakness in these bars, and the market's not falling after this. And when we look at the smaller time frame, we begin to see why that is. We can see that, you know, this inside bar here, it's right, we're not getting, after 2 months of sideways movement with the same close, you would think that we would go down, right? If that's what the market's going to do, if that's what we're anticipating is a pullback in here, we would expect the market to go down. But it's not doing that. In fact, it's holding inside the range of the second month here. So it's telling us that the market is still fairly strong. Month hasn't closed yet, so we have to be cautious about that. And now we'll see what this does, and we want to see it take off and push higher, right? Now the month closes, and we haven't fallen out of bed. In fact, we're just going sideways in here, holding this trading range. So now the market's got to take off. and show us that this is going to be a trade to keep and not just pitch out. So we're making higher highs and higher closes. More volume came in the last week, and it closes firm. But remember, we want to get above this level here from that resistance earlier, right? So we have some volume, more volume coming in. This is good. This is very bullish in here. We look at the monthly. Obviously, we're coming across that monthly high, so this is going to be important. Clear this out here. But we can see that as price goes up, making higher highs, higher closes, and higher lows all the way up, and volume is coming up, coming into the upside. So we expect this market to push up and through. And let's put a line on here. And so we see this is good sign in here. The market pushing up and volume coming up as we approach this resistance level. This is a bullish indication, and we can see it on the monthly as well. We got volume coming in, and we're pushing. We expect some resistance here, and so we may have a little bit of pullback or sideways movement. But as long as we don't start seeing big volume coming in and poor closes, we should be okay. Last month closes, and so does the quarter, and both look bullish. Okay, everybody see that? So we don't want to take that long trade off, right? We want to hold that. Notice that each time it's dipped underneath this level, it pops right back up again. Now more volume is coming in. And the close is still there. This suggests that this is absorbing in here. More volume as we push through. Now, what does that this week suggest to you? What does this week indicate? It looks like a test of the break. Yeah, it would be a test of the break. And as you point out, Brian, it's an inside bar. So it's an inside bar. We come down. It's a down bar. Look at the volume. It's comparatively lower than the other weeks. So this is a test, a successful test. Well, for success, it has to rally away, but this is a good test in here. It's a very good test. It's exactly what we want to see. So yeah, you would add to your long, and that would be the right play here. If you're position trading this market or swing trading it for a longer haul, because that's what we're looking for. Now notice the yearly. What we're doing on the yearly here is we're climbing up to back up to new highs on the year. Okay, new highs on the year, and then we test. So that's bullish. Alex says last quarter spread is narrower on relatively high volume. Yes, last quarter's is more narrow, but we notice what that narrow spread is. That narrow spread is this in here, right? It's actually, sorry. It's these 3 bars here. Okay, so 2 down bars that didn't go down lower, and then we start to move up. And it is roughly this area in, where do we start? Yeah, somewhere in here. Okay, so it is narrower, but notice what I'm trying to do, Alex. When we look at the lower time frame, we see that that narrow spread was not distribution, but accumulation. And we accumulated in here, okay? So yeah, narrow spread on higher volume, but I don't see distribution. What it was there was buying. There was certainly some selling in there, but the buying overcame that selling. Okay, I hope that's clear for you. And it's the way we want to be using multiple time frames. So we get an indication on the higher time frame price bar and volume. We want to look at that on the lower time frames. Yearly, quarterly, and monthly shows current price at $249.90, but weekly shows $285. Yeah, as I said before, sometimes it is a little off by a bar or two, and unfortunately, it'll catch up. There we go. So now it's all set back up again. I don't know why it does that, Gajendra. It's just a function of this software. It's not perfect. We're building quarterly and yearly bars, and we're all the way down to a weekly. So you could get it to be really refined when you do this. I'll show you afterwards that you can actually make these out of 1 minute bars. The year can be made out of 1 minute bars, so you can get it really refined. But that takes an incredible amount of memory, and it takes a long time to download that data. So I didn't do it, and I think that's part of the reason why we get different price closes here. But the bars still should be pretty close to being accurate here. Okay, so now we want to see this move up and away, right? Now, as we're moving up higher and breaking beyond this, what I would do is I would make another trend line in here and start putting that in. But I can see already that we're maybe do this, but maybe also we are going for a more accelerated trend in here. It's the difficulty with diagonal trend lines. They're sometimes. So let's just color this in so that we have I'll put it in red so that we can distinguish it. Okay. And let me just make this thinner so it doesn't seem as prominent. Because that's what it looks like to me, is that we're about to go on a new trend angle here, a new a new stride, as we would say in Wyckoff terms. And look at the yearly. We're making new highs, and this thing is just relentless going up. Now, we can also adjust our trend lines now and make them a little cleaner on the weekly. Do something like this. Clear these out. put that up there. Okay, so now we have more of a sense of what the market structure might be. There we go. There are some quirks to this program. Okay, so let's see what happens now with this. We get a test. Notice as we go back one here, notice that we are coming into, if we were watching this on a daily, here's where we are, right? And look at what happened, and you can see it clearly. It tests that level. And as we come down here, notice the volume is low. On the daily, this would be probably a shakeout in here. And then it immediately pops back up again and starts moving up, and the volume builds to the upside as we go up, indicating good flow in here. We had good flow on the last bar, good upflow here. On this bar, we have a test here, so that's good flow. We see the volume increasing as we go up, increasing as we go up, and increasing as we go up. When we pull back, volume recedes. When we pull back, volume recedes a little bit. So all very bullish in here, all very bullish. And now we start to push, and notice where we're getting to. So good volume coming in. So now, we're at the supply line, and what do you notice here? Shortening of the thrust in the price bars, yeah. So we're long, we've got a pretty good position on. Should we keep this position or should we exit? What do you think? Taking a look at all of the time frames that we've got here. And I'll prune some of this. What would your sense be on this? Shall we hold it for longer, or should we trim some of it or get out altogether? Seems to be respecting this supply line, so I'd be out. Okay. Shortening of the thrust and clustering of closes, we could lighten up, but I'd hold it. It still looks very strong. Okay. Monthly and quarterly look pretty strong. I would hold. All right. Let's see what happens then. Higher prices got rejected up there. Going back. Notice the volume. And look at the volume come in. Okay? Now this is the end of the week, or very close to it. What do we notice now? Still hold, or do we want to take a different tact here? Ted says, whoops, exit, close, there's selling coming in. Yeah, I think that's probably a good idea. Notice the monthly now is starting to show. We've got pretty decent volume on the monthly, and we're starting to see selling coming in. We are also there pretty aggressively up on the yearly. Quarterly is showing some selling. So if we are now going, now this is different, by the way, than what we saw before. We've broken out and we've been up for 3 months after the breakout, right? And the same thing on the quarterly. We had just broken out on the quarterly, right? And we did come into that area, but we said, gee, we want to give it a little more to the upside because we did just break out of this line in here, this congestion area. Well, now we've been broken out for 3/4 of a year. And now we're overbought in the trend channel, and we're starting to see a little bit of negativity come in, right? And we can see shortening of the thrust and some lighter volume on the last weekly bar, and some negativity. So yeah, probably a good idea to exit out of trades here, or look for a rally up and then take the trade off at that point. So now let's see if I can do this without too much craziness here. Let's see if I can bring in the daily chart in here. And so now, as we look at the daily, actually, let's back this off a bit and look at it now after we have these 2 weeks here, right? We have a strong week up going into the overbought line, and then we have this week is a little bit less. And let's just see what happens. So notice we're getting a potential upthrust here. Also notice on the daily, I should have brought this in earlier, sorry about that. But as we push up in here, we have good volume coming in. Now as we push up above this level, look at the volume level. It's not giving us the same kind of volume as we saw earlier, right? Another day showing, that's the end of that last week, and now the week starts off negative again. We can draw a line in here and see that we are indeed getting over, we are at the overbought level, and we're getting an upthrust situation here, right? So this would tell us we can take a short. This is a good short opportunity in here, where we are, see if I can do too many charts, I guess, where we're overbought in the quarterly and we're neck up against the weekly supply line. And again, as we try to rally up, we see a little volume come in, but it immediately gets stepped on the next day. So that's negativity coming into the market. And so we come down to the support level, and here we are. Now we can go back into real time, and we have a little bit of a spring situation occurring here. So would this be, do we want to take this spring? I wouldn't take it. Not for me. No, too overbought. Okay, so let's see what happens with this then. Well, that was a good idea, right? That was a very good idea not to take that spring. And the reason we don't take the spring is because we have negativity coming in on the weekly, and also being in an overbought position on the monthly. We are now expecting some sort of a pullback, right? And so a spring, when we're expecting the weekly and probably the monthly to come down. Where would it come down to? Let's ask that question before we get too far along here. Where would the where would the weekly and monthly, where would we look for a pullback to? Close this down a little. Yeah, 2400, says Brian. Right. So that would be the logical place, right, for this market to go around the 2400 level, give or take. And if it's still strong, it might hold up in here at last month's low on the monthly. We'll see what happens with this as we get there. So let's watch and see. And what do we notice here? So here we are at the monthly, just at that level. Is it going to hold in there and then pop off? Overbought at, what's that? EVNO, change of behavior? No, change of behavior. Oh, I see, change of behavior. Yeah. So here we are. It is kind of holding that line a little bit, right, on the monthly. But here's the daily. What do we notice here? It's a little hard to do all these charts at one clip, and probably not really all that necessary, but you'll see why I want to do this in a minute. What do we notice here? Test of stopping volume and spring. Okay, so should we buy in here, do you think? Spring on top of previous resistance, strong buying before 2400, so let's go long. Okay. We can go long in here. Large down wave equals change of behavior, says Ted. Oh, now this is going to be interesting. I don't know if I can do this or not. Let's see if I can. Oh, let's do it different. Let's not fool around with this. Let's just do it this way. So what Ted is saying is that previous down waves weren't all that strong. Let's go back a little bit further. Here. Oops, can't do that, but you get the idea, right? We don't have much in the way of big down waves. And now look at this. See the difference? We can also make the picture a little more complete by looking at the up waves too. We have pretty decent up waves here. And here, and here. And suddenly, when we had shortening of the thrust on the weekly, they got shorter. And they're still shorter in here. Okay? So, yeah, potential change of behavior. And we want to pay attention to that. But let's assume we stay long in here. Crunch it up a little bit. come back to them. Yeah, I guess we can do it this way. So let's see how this operates in here. So as we look at this, we're having trouble getting over this resistance, but maybe it's absorbing in here, right? And let's see if it'll move up and through this. Let's see, Brian says large down wave on the daily, but what does it look like on the monthly? Also, there isn't much cause on the monthly for a large move down yet, with a very strong uptrend in the background. That's true. That's true. But let's see what happens here with this market. So on the monthly, we come down and we hold into support here. Right? But remember, we're overbought on the quarterly. So you have to kind of keep in mind that this is significant in here, or could be significant. We'll see why I say that in a little bit. But let's just keep looking in here. We want to get above this level, right? So far, how does this... Too long sideways, I'm out. So Dean is out of his spring trade. So how does this rally look so far to us? It looks pretty weak, right? And choppy, not great for the long. Yeah. So we're at the point where a feather's weight on either side will determine what the market does, right? We're at that point. We're at the danger point. This market needs to push up and through and do so pretty quickly, or it's gonna have some difficulties. So let's see what it does. If I was still in, I'd move my stop up to break even. Okay. And Ted says, let's short this. Weakness in the background. There's supply. Yeah, notice if we extend this line over, where does it go to? Right into the breakdown where support was broken. Remember, we said, oh, this is a spring situation setting up in here. But we didn't want to take it because of the shortening of the thrust and the weakness that we were seeing. Now we come right back into... And then the spring fell apart the very next day, and now we come right back into that area where that spring fell apart. Now it got rejected the first time. Price rejected higher highs the first time we went up there. And the question is it going to continue to reject higher prices, or is it going to be able to push through? And let's see. Sorry, all the charts here. So what does this look like to you here? Now, Ted liked this enough to go short on this bar. What about the rest of you? Sell stop at the low, you can do that. So a tick or two underneath here, we can sell this short. Edmund says let's just go short in here. Notice the volume on this last day here. start off trying to push through this level. We come in on this day with increase in volume. The next day we have the same close, higher high and higher low, but no progress up on basically the same volume. And the last day here we have a lower low compared to the second bar and a lower high and the same close and much lighter volume, signifying in this context that buyers are not able to push the market up. This is not a test. Even though there is a trend line here, I understand that. What's more important is the supply in the background, the resistance that exists, and the inability of the market after 3 days at the same level to overcome this level. Okay? And Ted says he thinks weak, cluster of closes at resistance, lower high and lower low bar. I think it's weak. Looks like a test, says Brian, but I don't like the position for a test. It looks weak. If this didn't exist in here, or if this came up, if we pushed up above and then came back down and had this bar, then I would say, yeah, it looks like a good test. But this is not really a test because of the context, because of the structure that we're in. So let's see what happens. Well, so everybody's short here, okay? And that was a pretty good move in here. Okay. And let's see what happens with this. What do you notice right away? The supply is coming in, right? Yeah. Shortening of the thrust into support, okay. But the volume's coming in down here, right? There's supply in this market. There's ease of movement. Compare this with this. And which is stronger? Right? Which is stronger here? Is the move coming down flowing easier and drawing out volume to the downside, or is the move up flowing easier and drawing volume to the upside? Volume's increasing on the downside. Yeah, it's increasing on the downside. That's right. Look at how long it took us to get to this point. Right, this is the midpoint. We got 1, 2, 3, 4, 5 bars to get down, 1 week to get down, and 2 weeks to go up. I mean, that's another way to say it. And look at the weekly chart. Look at the volume coming on that. And let's go to our monthly. How does the monthly look now? We had been trying to hold this level, but now we're having the third month of a lower high and a potentially lower close. Okay? This is better than any down wave since the highs. Yep, it is. So let's see what happens. Even more to the downside. Now, light volume, right? So, is this a spring? Is this a situation for a spring? Dean says no, hold the shorts. Too much weakness in the background, says Brian. Okay. And look at the weekly. Oh, I guess that's coming in there a little. Yeah. So here we are in the weekly. Notice where we are, by the way. We're at that 2400 level we were talking about earlier. Let's go back and look at our charts in here. Okay. We're at that 2400 level on the weekly. Let's look at it on the monthly. We're also at the same level on the monthly. But really it's the daily and the quarterly that's telling us that this is not a good idea to go long in here, because we're overbought on the quarterly and we have supply seeping in all over the place. Okay. Also, looking at the weekly, we have some buying coming in here and here, but notice this bar, we get large volume coming down, and it does stop in here, and now we're trying to hold, maybe that's the wrong volume, let me see. Yeah, that's the wrong volume, it's the last bar. But still, quite a bit of volume coming in here. And so now, is this going to hold? Maybe it will. Let's see. Look at that. We have to let the weekly bar close, right, before we can make a judgment about it. And we can now start to see that this is got some negativity coming in with it. Now, if this doesn't hold in here and we're going to look to, come back down harder, let me rephrase that. If we're going to get, we haven't had a pullback in a while on the quarterly, so now we could get a big move down is the point, because of this quarterly market. Notice the volume on this bar, and it closes off, and now the next bar is down. So if we're pulling back, where might this go to on the quarterly? Where might this go to on the quarterly? $1,900 to $2,000. Yeah, in this area here. Right? Right back into this area here. So if we're going to move like that on the quarterly, that could be a significant move down, if that's where we're headed. And that's a logical spot to go to. Okay. Sorry, I can't keep that all worked out properly. So let's go back now to the daily chart. So I guess let me be clear what I'm trying to say. We are on the yearly. We've been parabolic. On the quarterly, we're overbought and we see supply coming in. So if we're going to see a move on the quarterly, it's going to drag everything else down with it on the monthly and the weekly. And we're starting to see this all break down now on both the weekly and the monthly charts. But it's the daily that's doing, that's showing us that the down waves are much larger than they were before, much larger than the up waves that we had. Let's crunch this down and just take a good look at that. Be clear about this. Okay, the last big down move was way back here. Change the pen color. Was way back here, and that went that length. Oh gee, look at this. That's double that, and this is double that as well. So we are potentially seeing the acceleration, the market starting to accelerate down, because the quarterly is going to drive this down. So let's see what happens. Look at that monthly. and the quarterly. Anybody have an idea what this is? We've just blown right through. Look at the quarterly here. We just blew right through our support level. Anybody have an idea? The financial crisis. This was a crisis. The way it's reacting, Enron. No, it wasn't Enron. Let me put, look at the yearly chart. Let me put the dates on here for you. This is the 1987. Yep, 1987 Black Monday, and the following few days of the stock market. This is the Dow Jones, and you can see that this was quite a move for that time. Today, this would be nothing. We could have, we had this in August. We had a move like this, but at that point on the Dow, that was huge. And the point I'm trying to make here is that we saw that the yearly was way overbought and parabolic, and that the quarterly was overbought and showing signs of some sort of a pullback coming, right? And when we drill down to the smaller time frames, particularly that weekly, we could see the shortening of the thrust at the overbought level, and then we follow it on the daily, and we can see that this was just very weak at this point. This was just very weak. Interestingly enough, this day here, pull this up, put the dates on for you. This was the date here. I'm pretty sure it was this day. Could be that it was one of these 2 days that Marty Zweig became famous, because he said, I'm really concerned that the market is going to start to have problems. And on Louis Rukeyser's Wall Street Week, it was, I can't go back to the time chart, but that made him famous, that call, and it was right around one of these few days in here. But he could see the weakness coming in to the market, and interest rates were rising at the time, and all kinds of other things were going on. But there was enough cause to take this market down in here. This was your last point of support and preliminary supply, what have you. But there was enough of a count in there to take this down, to show a pretty good drop. And that's what he was seeing at that point. Scary, yeah. Any comments or questions? Fantastic. Yeah, I thought this would be pretty cool to kind of look at keep in mind these higher time frames, and when you start to see weakness on the quarterly like this coming in and it's overbought, it doesn't mean that we're going to get huge moves like this all the time, but gee whiz, we can certainly get quite a move down from that, as we see here. We can bring this up to the current time. Just looking at this, to the current day and see what the quarterly is telling us. So now, notice this is the Dow still on a quarterly basis, right? There's that kind of big move I said in August that we had. There it is, and then we rally back up. But there's no weakness coming into the market right now, right, on the quarterly basis. We had some, you can see that it occurred right in here. I'm looking now at, I'm going to take the volume off because it's really not all that helpful for us. You can see that we start to see weakness come in here on the quarterly, and if you know, the obvious move was down to here, and that's where it went. It went down there and a little bit farther. Okay. Quarterly chart is very useful if you're swing trading. Doesn't always tell us that the market is about to unleash a huge move down. Here we had some weakness come in, but you would look at this and you'd look on the weekly and the daily, you'd see that it pushed off of that quarterly low. Here we get a cluster of close and we do pull back. Here we get some weakness coming in and it starts to pull back. So very useful if you're swing trading, and if you're playing with playing options and you want to go out a little bit longer, it's a great chart to be using. But right now, when we'll look at the quarterly, there's no threat at the moment. Okay. Would you take the spring on the daily given the strong uptrend and the higher time frames and the fact that the daily at that point didn't have much cause? No, because of the weakness in the background. There was just too much weakness there. I bet this went back to... Oh, no, it didn't. Okay, so... This is 99. Here we go. Yeah, so this spring here, we'll open this up. So this spring, the difficulty with it was the volumes coming into the downside here, and we've got good ease of movement, and we had this kind of choppy rally coming up. So, okay, you could maybe take it. I don't see a lot of good buying in here, on the daily chart, but if you did, your stop would be under here, and you would be taken out, in the next day, right? The problem is that you would not only be taken out, but you'd miss everything else. You might say to yourself after this day, oh gee, this market's going down. I want to be short. Look at the volume coming in. And so you look to short, against the 2-day low or the yesterday's high, something like that. And you can get a short off on the 2-day low. That comes in nicely there. I hope you see that. Right in there. So you can get a short off on that, and then you're golden. But who knew that was actually going to happen, right? Except you would be looking towards the weekly and the monthly charts and seeing this kind of weakness coming in. Let's go back to it. It's not that difficult to do here. Let's find out the date. So it is the 13th, October 13th. It's a bit of a thing to go here, but I'm doing this a lot, so I'm getting good at it. 87, October 13th. So you can see how you can get to this, right? So that'll get you there, and then you go into what's called global mode. And so here we are at this spring, The weekly doesn't look conducive for a spring at this point. I brought everything back to that day, right? So the weekly really does not look very conducive for a spring. And worse than that is the monthly doesn't look very conducive either. So for those reasons, you've got supply in the market, and all the higher time frames are saying probably lower to go here. Hope that helps, Brian. Weighing that against the potential change of behavior on the daily with the larger down wave. Right, that's what you've got to do, is weigh it out. The earlier spring with the blue arrow. Oh, this spring, wait a minute. This spring here. Yeah, I wouldn't take it. That would not be a trade I would find to be a good trade because of the large down wave. I would be just sitting back, waiting for an opportunity to go short. Either up in here on the trend line, but that didn't materialize. This trend line is holding, right? In here. This supply line has become support in here. But then you say, okay, well, maybe, in fact, we're going to go all the way back up to the top. We don't know. Let's see what happens. If it does, then I miss this move, but I'm still going to be looking to go short. And that doesn't happen. We get a choppy rally up, and then the opportunity opens up here for us to go short. So I would not be. I would avoid this trade because it just doesn't. There's too much supply in the background. A little tip I found with multi-charts: click jump and then click on the bar you want to go back to. Oh, let's try that. Jump. So let's go back to this bar. Oh, it worked. Pretty cool. Went a little farther, I think. Let's try to go to this. It goes a little bit farther, but that's pretty good. I didn't realize that. That's helpful. Thanks. If global mode is on, it will take everything back to that bar. Okay, great. Great. Good to know. Yeah, I'm learning more and more about this. I really do like this charting package quite a bit. Yeah, that's nice. I like this a lot. Okay, so any other questions on that? I thought it would be fun to do this. Yeah, it really is great. This charting package. What's the monthly cost of multi-charts? I'm not sure. You can go, I forget exactly what it is. You can go to the site, multicharts.com, I think is the name of the site, or just Google multi-charts. You can try it for some trial period, probably 30 days or so, and see. But it'll tell you what it costs there. Can you just use your TradeStation data for the data and then you only pay for the use of the charts? Well, you use the TradeStation. You have to have data to feed multi-charts. And you can use TradeStation data. So if you've got TradeStation and you're trading off of that, you can feed it into multi-charts and you're all set. You don't have any other data expense than what you've got on TradeStation. Okay? You're welcome, Brian. Okay, so let's take a look at the current market. We looked at the quarterly chart a moment ago of the Dow, but it's the same thing. There's really no negativity coming into the market on the higher time frames. I know, we're not going up with great alacrity here, but we are in the middle of vacation month. August. Most of Europe is off during this month, and a lot of folks in the U.S. are off as well, especially the last couple of weeks of the year. So it's traditionally a low volatility period. Not a surprise. We did see some volume come in. today to the downside, but it didn't go very far. Last week, let's just back up. Last week we talked about this line being important in here, and we said, you know, a test of that line, which also, let me get a pen, which also would be a test of the vertical acceleration bar. And so we see that in the terms of a little shakeout coming down, and then the market bobs right back up again. We said that, you know, kind of looking at this line in here around 2190, 2185. I'm sorry, 2190, 2195 would be a spot to see potential supply come in, and that's what happened basically. So what are we looking for next week? Well, you know, this line is still important, but I don't even know that we're going to get down there, to tell you the truth. I think somewhere between the low of, you know, 270, the low of yesterday or today, and 270, it should be the low in here. Obviously, if it starts closing down below today's low, then that's a suggestion of supply coming in. And then if that's the case, we'll look for a bigger pullback, maybe down into the 240, 2130, 2140, 2134 level. That's a possibility. I don't foresee that, but you know, I never try to predict the market, just anticipate. And so I would try to I'm anticipating that support will come in here, and that we'll see the market rally back up, and the high would be, you know, again off of that line, not a strong rally here, but around the 2200 level. Yeah, 2200. Yeah, that would be if we get up that far. But that would be the line I would be looking at. I didn't draw that in here. I've got it on something like that. Okay. So that's what I'd be looking for. Obviously, if we start closing down below this level, I don't think, if that starts to happen and we see volume come in, I don't think this will hold. I think we'll more likely come down farther. But right now, I don't see it. You know, I don't see it. We are flirting around the top of last month's high, so that's something to keep in mind, you know, in all of this. I see this just as low volatility in the middle of August and nothing much else than that, and with momentum still to the upside. All right, any questions on that or anything else we did? All right, then, just a reminder, we'll see you on Thursday night. That's in 2 days, and so have a great couple of days trading, and I will see you on Thursday night, our normal time at 8 o'clock. All right, everybody, thanks a lot. Take care now. Bye-bye.